Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 23rd of August. We'll also include a bit of a weekly sort of preview. There's a few things going on, like coming into the third week of the month. The major US numbers are out. There are a few numbers coming out sort of Wednesday, Thursday, Friday, durable goods, some GDP numbers and personal spending, PCE price index, all those at the back end of the week. So we'll get a bit of an indication later in the week what's going on. But right now, you're sort of just piecing together where the activity is, and you having Metastock or Bloomberg or whatever it is, whatever news service, you like to get a bit of a recap, bit of a summary of what's happening, and this is where they can start regurgitating a bit of their news from last week. The dollar dips from 9.5-month high, but near-term outlook still upbeat. Now, the dollar is not going to go up in one straight line. The currencies or any of the financial markets do not do that unless it's some extreme event. So you're going to see little peaks, drift back down towards support in the dollar's perspective, and then keep going. Outside of that, we've got there's a lot of news here that doesn't really come into play, right? So there's a bit of a recap here, like CAD biggest loss, weekly loss since March. It's almost trying to create some sort of drama, but the dollar CAD is just giving up gains, the massive gains it had after the Bank of Canada came out. So they're going to bring forward their interest rate outlook. So anyway, the dollar is moving up. Now, if I'll come back and show you well, actually, let's kind of have a look at the equity markets first, right? So you got the equity markets, nice little bounce on Friday, right? So, a bit of pressure off the whole interest rate perspective as far as the equity market's concerned. That sort of stabilized the rally in the dollar, right? And saw Euro, Sterling, Aussie, Kiwi hit some lows and sort of just bounce off those lows. So, but that once again is normal. The short to medium term trend at the moment is the dollar moving topside. Now, if I bring you over to the charts, you can see very easily that the dollar is moving higher. Now, dollar Swiss, if anything, the two safe haven trades, the yen and the Swiss, still not jumping on board the dollar move, right? They've had some rallies, but they sort of like almost refusing to go any further. Now, dollar CAD, big move to the top side, just drifted back to close the week. And you see Sterling, I think Sterling still got, I think Sterling is going to be the biggest mover. It's been holding up against the dollar just for UK reasons, euphoria around the pandemic and vaccine rollouts and all sorts of crap. It is set up for a massive move to the downside. It has caught up with Euro, Aussie, Kiwi. These pairs are already heading lower. And I did mention that at some stage, Sterling will catch up, and it's caught up. And I think there's a chance for it to really outshine the rest of the pairs if the dollar can maintain its rally. So we've got the direction here, right? So dollar Swiss, dollar yen, not exactly going just yet. That may change. Now, if there's a huge spike in some sort of geopolitical event, we may see the Swiss and yen actually rally against the dollar, right? So I think that's why the market's sort of just on hold at the moment with those two pairs. If everything was awesome and gorgeous and there was no geopolitical crap, so we got, this Delta strain, we've got Afghanistan, we've got a few other things in the pipeline geopolitically, globally, that's sort of holding the safe havens at bay at the moment. But if that was to go away, you'd expect dollar yen, dollar Swiss to catch up or both shoot to the top side. But right now, you've got to be thinking as a trader, what's the plan from here? Well, I'm buying dips, right? Of dollars. I'm going to buy dollars. That's the way of it. Now, you can have the contrarian view and go, well, if everyone's buying, it's going to go down. Well, yeah, that's great, but you're going to get one shot at that. We're talking about a trend here. Now, I've got the daily charts up here. You can see the pairs all sort of moving down. So on a number of different technical perspectives, these pairs are moving higher. Like the dollar index is doing its best to get going. It just hasn't had that clean breakaway data. And I'll come back to this is where, Wednesday's durable goods and the rest of the US numbers after that time come into play, because if they're strong, it'll give the market confidence to take the dollar higher. At the moment, the dollar index is going, but it hasn't exactly screamed to the top side. I'd say that's because the yen, the Swiss haven't exactly joined the party. Now, here's Sterling sort of breaking down through that longer term support level. Aussie really likes the downside now with the increase of lockdowns and things that across Australia. You'd expect the Aussie to get absolutely belted another couple of 100 points over the course of the next week. Kiwi, it's now joined the pandemic lockdown situation. So once again, if that continues, downside risk to that pair there as well. Now, also, I've been focusing a bit on, just so you understand, is the pair going up or down using the sort of bull bear line. Let me just change that pen color because it's hard to see. Euro's already down through it. Aussie's down through it. Kiwi is down. Dollar CAD had a little probe above, and the dollar index also just above that bull bear line. So that tells you those pairs, probably on every layer or every perspective, are heading lower. Now, just on that, if you come back and have a look, well, this is where sterling is, right? Sterling, dollar Swiss, and dollar yen. Well, dollar yen's already above that level, but sterling has got a bit of a way before it really officially becomes like a bearish feature. And dollar Swiss also has got a little bit of work to do on the top side before you'd be saying it's extremely bullish. So that's something to keep an eye on as you go forward. But what you're trying to take out of this is you're just trying to isolate direction. Okay, it's very clear. Euro's down, Aussie's down, Kiwi's down. You'd have to say dollar CAD's up. And even though it's early stages, the dollar index up. Sterling, technically it's broken down through this level, but hasn't gone through everything. As I said, I think it's got a big level to catch up and head down towards 128. We need a little bit of bearish geopolitical UK stuff, and it will run very quickly. And just a consistent, strong dollar this week, and we will start to see things matching up. Now, so coming back, where can we focus this on? So if I just bring you back to the calendar, right? Now, let me just focus on the high impacting data, right? So I'm just going to change my calendar to the to highlight, the high impacting. Now, Metastock, Bloomberg, they can be susceptible to start labeling things all high impact, right? It loses its impact. If everything's high impact, it's like, right, I don't get it. But just have a look at this. Now, I wouldn't say the manufacturing data is massively high impact, but they have got it that way. It's just something to keep an eye on though. Monday, right? The only key big data coming out really is out of Europe. We've got Euro at a really, well, not at a nice level, back at 117 the figure. I think you're selling that on rallies back towards 117.30. So once again, there's a couple of options here with this. If these numbers come out strong, well, you're looking for Euro just to pop up and then sell into that rally. If these numbers are really weak, well, then you're looking to sell immediately at the market levels. Now, also coming into that, we've got some UK PMI numbers and then also some US PMI numbers. So you can sort of have a good look there at, so Europe, UK, US, weigh them all up and see how it all pans out. The first of the US housing numbers as well. I'd say it's back to second or third tier, that level at the moment. Consumer confidence, that could be a good thing for the Eurozone as well. So make sure you keep an eye on that. Then as we go into Tuesday, once again, you've got a bunch of European numbers. I've always been a big fan of the IFO numbers. Okay, very good indication of business conditions and the whole expectations. But where it really sort of comes back into play, I think from Wednesday onwards, right, you're starting to get into some of the US numbers, durable goods, the initial jobless claims as well on Thursday. And then if I just scroll down just a touch, you'll see some consumption numbers, and there's the PCE price index in there as well. It must be like second tier as it's been labeled. So just keep an eye on this. This is the numbers that you can see. Are people spending? It looks like they are in the States. If all these numbers, the durable goods, the PCE price index, University of Michigan sentiment numbers, etc., the jobless claims in the US are strong, or even as expected or strong, then we're going to see this nice move in the dollar continue. At the same time, go back and scrolling back earlier in the week, we start to see some weaker numbers in the Eurozone. Well, that plays in nicely for a much lower Euro, right? So there's a few things to consider there. I always would make sure you get all these things ticked though, if you do have Metastock, because you want to see some of these, as I said, some of the data releases aren't labeled correctly. Some that are high are labeled low and vice versa. So make sure you just have a look through and just see where the third and second tier numbers are, because sometimes they can come into play as well. All right. So just having a scroll through, see if I can find anything else in there. Doesn't look like there's too much else to really worry about. So just keep an eye on that as we go through the week. Now, if there's any sort of news or geopolitical news about potential tapering, like that the US is going to taper, or that's basically going towards an interest rate hike. Okay, so if that's the case, you should see equities come off, right? And the dollar block lower and the dollar rally. At the same time, if we start to hear like rumblings, oh no, they're not going to taper, which would only be like Bullard or someone sort of having a bit of fun, then equities would rally and you'd see the dollar block rally and the dollar fall. Okay. Now, if you're in the Asian session, European session, keep an eye on the US equity futures. That's where you can get a lead into what's going on with the equity markets. At this stage, they are up. Okay. That should give us a bit of it is giving us a bit of a risk-on situation where we have the dollar block rallying and generally you'd have the dollar pairs falling. This is what I was talking about as well. The Swiss and the yen just don't want to play. They're not playing the dollar trade at the moment, right? They're doing their own thing. So the key to the start of the week is isolate the pairs that have the best technical setups, work out what you're doing with regard to majors. So to me, I'm dollar bullish. I'm looking to buy dollars on dips, which means selling euro, sterling, Aussie, Kiwi on rallies. Okay, buying dollar CAD on a dip. That's what I'm looking at Monday. And I'll piece that together with the market and the fundamentals that are due this week. See if we can't match up the technicals with the fundamentals, get some momentum in the market, and start picking off some cash. That's the plan. All right, guys, have a good one. Cheerio.